Welcome back to the Millionaires Motive, where we unlock the secrets to financial success and independence. Today, we're diving into a topic that's on the mind of many forward-thinking individuals: how to retire early through smart investing. The dream of early retirement is growing more popular, with many aspiring to achieve financial freedom well before the traditional retirement age. In this episode, we're going to reveal 7 investment hacks that can help pave your way to an early retirement. These aren't just tips. They're strategic approaches to investing and saving that have been proven effective time and again. Whether you're just starting in your career, halfway through, or even closer to what's traditionally considered retirement age, these hacks are designed to optimize your financial trajectory. We'll explore everything from maximizing your retirement accounts and the power of index funds to generating passive income through real estate and more. These strategies are about making your money work harder for you, so you can enjoy the freedom and security of early retirement. So, let's get started on this journey to financial independence and bring you closer to the early retirement you've been dreaming of. Understanding early retirement begins with grasping the concept of financial independence, which is central to the Financial Independence, Retire Early, FIRE movement. The idea is to accumulate assets that generate enough income to cover your living expenses, allowing you to retire much earlier than the conventional age. This doesn't necessarily mean you stop working entirely. It means you have the financial freedom to choose how you spend your time, whether that's continuing to work, pursuing hobbies, or traveling. The key to early retirement is to set clear, specific goals. This involves determining how much money you need to live comfortably each year and multiplying that by the number of years you expect to be retired. A common rule of thumb used in the FIRE community is the 25x rule, which suggests you should aim to save 25 times your annual expenses before retiring. However, achieving early retirement requires more than just saving money. It's about smart investing and creating income streams that can sustain you for decades. This means considering factors like inflation, investment returns, and potential changes in your lifestyle or expenses. It's also important to understand the psychological aspects of early retirement. Leaving the workforce early can be a significant lifestyle change, requiring not just financial preparation, but also planning for how you'll spend your time and maintain a sense of purpose and fulfillment. In summary, early retirement is about achieving financial independence through strategic saving and investing, with a clear understanding of your long-term financial needs and lifestyle goals. The following hacks we'll discuss are designed to help you build the wealth necessary to reach this ambitious but achievable goal. Hack 1 in the journey to early retirement is to maximize your retirement accounts. This is one of the most effective ways to build wealth over time, thanks to the power of tax-advantaged growth. First, if you have access to a 401k plan through your employer, ensure you're contributing enough to get any employer match available, as this is essentially free money. The tax benefits of 401kk's are substantial. Contributions are made pre-tax, which can lower your taxable income and grow tax-free until you withdraw them in retirement. Similarly, individual retirement accounts, IRAs, and Roth IRAs offer significant tax advantages. Traditional IRAs allow for tax-deductible contributions and tax-deferred growth, while Roth IRAs provide tax-free growth and tax-free withdrawals in retirement. The choice between a traditional IRA and a Roth IRA often depends on whether you expect to be in a higher tax bracket now or in retirement. For those who are self-employed or run small businesses, options like SEP IRAs or solo 401kk's provide similar benefits with higher contribution limits. These accounts allow you to save a substantial amount of money for retirement, with tax advantages that can accelerate your savings growth. It's important to regularly contribute to these accounts and invest these contributions in a diversified mix of assets. By maximizing these retirement accounts, you take advantage of compound interest and tax benefits, which are crucial in building the wealth needed for early retirement. Remember, the earlier and more consistently you contribute, the more you benefit from compound growth over time. Hack 2 focuses on embracing index funds as a cornerstone of your investment strategy for early retirement. Index funds are a type of mutual fund or exchange-traded fund, ETF, designed to replicate the performance of a specific market index, such as the S&P 500. They are a popular choice for long-term investors due to several key advantages. One of the main benefits of index funds is their low fees. Unlike actively managed funds, index funds have lower expense ratios because they are passively managed. This means more of your money stays invested and compounds over time, rather than being eaten up by fees. Another advantage of index funds is diversification. By investing in an index fund, you're essentially buying a small piece of each company in that index. This spreads out your risk, as you're not reliant on the performance of a single stock. Diversification is a fundamental principle of investing and is especially important for long-term goals like early retirement. Index funds also offer the benefit of simplicity. Instead of trying to pick individual stocks or predict market trends, you're relying on the overall growth of the market. Historically, the stock market has trended upwards over the long term, despite short-term volatility. By investing in index funds, you're harnessing this long-term growth potential. Lastly, index funds are accessible and easy to invest in. Most brokerage accounts offer a range of index funds, making it simple for investors of all levels to incorporate them into their portfolios. By including index funds in your investment strategy, you can enjoy low fees, broad diversification, market performance, and ease of use, all of which are valuable in building your retirement nest egg efficiently and effectively. Hack 3 in your early retirement strategy is leveraging real estate for passive income. Investing in real estate can be a powerful way to generate steady cash flow, which is essential for sustaining your lifestyle in early retirement. One popular method is through rental properties. Purchasing residential or commercial property and renting it out can provide a consistent source of income. The key here is to find properties in desirable locations where rental demand is high. It's also important to factor in all costs, including mortgage payments, property taxes, maintenance, and insurance to ensure the property is profitable. Another approach is real estate investment trusts, REITs. REITs are companies that own, operate, or finance income-producing real estate. They are a more hands-off way of investing in real estate, as you don't have to deal with the responsibilities of being a landlord. REITs are typically traded on major stock exchanges, making them as easy to buy and sell as stocks. They offer high dividend yields, which can be a steady source of income for retirees. Real estate can also offer tax advantages, such as deductions for mortgage interest, property taxes, operating expenses, depreciation, and repairs. However, it's crucial to understand the local real estate market and tax implications. Additionally, real estate can be a hedge against inflation, as property values and rents typically increase with inflation. This makes it a valuable asset in a long-term investment strategy aimed at early retirement. Investing in real estate requires due diligence and sometimes a significant upfront investment. However, when done right, it can be a lucrative source of passive income, contributing significantly to your early retirement goals. Hack 4 for achieving early retirement is to engage in side hustle investments. In today's economy, relying solely on your primary job for income may not be enough to fast-track your retirement plans. Side hustles can provide an additional income stream, helping you save and invest more towards your retirement goals. A side hustle is any type of employment undertaken in addition to one's full-time job. It's typically freelance or piecework in nature, providing supplemental income. This can include anything from online freelance work, such as writing, graphic design, or web development, to running an e-commerce store, tutoring, or even renting out a spare room on Airbnb. The key to a successful side hustle is to find something that aligns with your skills, interests, or hobbies, so it doesn't feel overly burdensome after your regular work hours. It should ideally be flexible and scalable, allowing you to put in more or less time as your schedule permits. Investing the extra income generated from your side hustle can significantly accelerate your savings. For example, if you earn extra income from your side hustle instead of increasing your lifestyle expenses, you can direct that money into your investment accounts, such as your IRA, a brokerage account, or into more speculative investments like startups or crowdfunding opportunities. Moreover, some side hustles have the potential to grow into full-time businesses, offering not just additional income, but also the possibility of a new primary source of revenue. This could potentially lead to an even earlier retirement as you gain more control over your income and time. Side hustles not only provide financial benefits, but can also be personally fulfilling, offering a creative outlet or a chance to explore new interests. They can be an enjoyable and rewarding component of your journey to early retirement. Hack 5. In the pursuit of early retirement is the automation of savings and investments. Automating your financial processes can significantly enhance your ability to save and invest consistently, which is key to building wealth over time. Automating savings means setting up your bank accounts to automatically transfer a set amount of money to a savings or investment account at regular intervals, such as on payday. This approach follows the pay yourself first philosophy, ensuring that you prioritize saving over other expenses. It helps in maintaining discipline in your savings plan and can prevent the temptation to spend what you might otherwise save. When it comes to investments, automation can be achieved through setting up regular contributions to retirement accounts like 401(k)s or IRAs, or into a diversified portfolio of stocks, bonds, or mutual funds. Many investment platforms now offer the option to automatically invest a fixed amount each month, which can help in capitalizing on the benefits of dollar-cost averaging, reducing the impact of market volatility on your investment portfolio. Automating your financial processes also takes the emotion out of investing. It helps you stick to your investment plan and avoid making impulsive decisions based on market highs and lows. This approach ensures you remain invested and continue to contribute towards your goals, irrespective of market conditions. Furthermore, automation can simplify your financial management, saving time and reducing the hassle of remembering to make transfers or contributions. This can be especially beneficial in busy periods of life when managing finances might not be at the forefront of your mind. In essence, automating savings and investments helps ensure that your early retirement plans are consistently and systematically funded, setting a strong foundation for your financial future. Hack 6 for achieving early retirement revolves around cutting down on major expenses. One of the most effective ways to save more for retirement is by reducing your largest costs. Significant savings can often be found in 3 key areas: housing, transportation, and food. Firstly, housing is typically the largest expense for most people. Consider options like downsizing to a smaller home, living in a more affordable area, or even house hacking, where you rent out part of your residence. These strategies can substantially lower your mortgage or rent payments, property taxes, and utility costs. Transportation is another major expense. If possible, opt for more cost-effective modes of transport like public transportation, carpooling, biking, or even walking. If you own a car, assess whether you could manage with a less expensive vehicle or one that is more fuel efficient. Reducing transportation costs can include minimizing or eliminating car payments, lowering insurance costs, and spending less on gas and maintenance. Food expenses can also be trimmed without sacrificing quality. Planning meals, cooking at home instead of dining out, and shopping smartly for groceries can lead to significant savings. Avoiding frequent takeouts, expensive coffee shops, and impulsive grocery purchases can add up to a considerable amount over time. In addition to these major areas, look for other discretionary expenses that you can reduce or eliminate. This could include subscriptions you don't use, high cable bills, or expensive hobbies. The goal is to live below your means and save the excess towards your early retirement fund. By focusing on reducing your major expenses, you can free up more money to invest and save for early retirement. This doesn't mean living a life of deprivation. It's about making conscious choices and prioritizing your long-term financial goals. Hack 7 in the journey towards early retirement is continuous learning and adaptation. The financial world is dynamic, and staying informed about market trends, new investment opportunities, and changes in tax laws is crucial for maximizing your investment potential. Continuous learning involves staying updated on financial news, understanding economic indicators, and keeping track of how global events might impact your investments. This doesn't mean reacting to every market fluctuation, but having a well-informed perspective that helps in making strategic decisions. Additionally, continuously educate yourself on various investment vehicles and strategies. This could include reading books, attending seminars, or even taking online courses on personal finance and investment. The more you know, the better equipped you are to make smart investment choices and adapt your strategy to changing market conditions. Adaptation also means being willing to reassess and adjust your investment plan as needed. Your financial goals may evolve over time, and so should your strategy. For instance, as you get closer to your desired early retirement age, you might want to shift from more aggressive investments to more conservative ones to preserve your capital. Staying flexible also involves being open to new investment opportunities that align with your goals and risk tolerance. This could be exploring emerging markets, considering new asset classes, or leveraging technological advancements like robo-advisors for investment management. Remember, the path to early retirement isn't set in stone. It requires an ongoing commitment to learning and adapting your strategy as you move closer to your financial goals. By staying informed and flexible, you can navigate the path to early retirement more effectively and efficiently. As we wrap up our exploration of the 7 hacks to retire early, it's clear that achieving this ambitious goal requires a mix of strategic planning, disciplined saving and investing, and a commitment to continuous learning and adaptation. From maximizing retirement accounts to cutting down on major expenses, each hack plays a crucial role in accelerating your journey towards financial independence. Remember, the path to early retirement is unique for everyone. It's not just about following a set of steps, but about finding what works best for you and your financial situation. The key is to start with a clear goal, make informed decisions, and stay committed to your plan, adjusting as necessary along the way. Whether you're just starting to save for retirement or you're well on your way, these hacks can help refine your strategy and bring you closer to the early retirement you aspire to. It's about making smart choices now so you can enjoy the freedom and security of early retirement later. Thank you for joining us on this journey with the Millionaires Motive. If you found these hacks helpful, please like, share, and subscribe for more content aimed at guiding you to financial success. We look forward to continuing this journey with you, providing insights and strategies to help you achieve your financial goals. Here's to your success and the many opportunities that await on your path to early retirement.